Hello, everyone. Hope you're doing well. Okay. Hello, everyone. Thank you. Thank you for joining. Hope you're doing well, everyone. So let's get started with our uh, webinar for today. So today we are going to cover the technical analysis part. We are going to cover various topics. I hope we will have enough time to cover the technical analysis and the candlesticks pattern and the technical indicators as we can go for it. Okay. So before we start, as usual, I would like guys to ask you a question, the normal question that I'm asking in every single webinar that you attend with me. So I will give you a poll. I want you to answer it. So I will launch a poll right now just to know your level of knowledge in trading. So I launched the poll. I want you to answer what is your level in trading? Is it beginner, intermediate, or advanced? Because last time we covered the fundamental analysis and how to trade the news. This time we're going to cover the other part, which is the technical analysis. So it's really important to uh, also know what guys have you understood from the technical and the fundamental to build a good story and to get it started. Okay, so I do have 49%, 47%, let's say. Okay, so we have almost equal number of participants here. I would say 49%, 50%, 51% beginner level. Okay, still people are answering. Okay, 44. Okay, I think everyone has answered. So we do have for 50% beginner level, 48% intermediate, 2% we have advanced level. Okay, that's perfect. So regardless of what's your level in trading, I promise you that I'll give you the best that I can, the most value added I can get delivered to you within this 1 hour, teaching you how you can utilize the technical analysis for your own benefit and in your trading. So, guys, let me start the topic with defining the technical analysis and why actually technical analysis is important in trading. Or is it actually important in trading or no? Now, guys, first of all, I'll ask a question and I want you to write this in your chat box. Tell me, what do you think? The question is very simple. Guys, do you think technical analysis is trading? Tell me, do you think that technical analysis equals trading? Yes or no? I want your answers. I want everyone to answer. No, 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 no. Yes, sometimes. No, no, yes, yes. It's the basis that we build on. Fundamentals add to it. Yes, and the funda. No, no. Yes, partially. No. Okay, that's great. So we can see some people are saying yes, some people are saying no, some people say partially. Yes, this video is gonna be recorded. Okay. Some people are saying that it's partially related to trading and so on. So just to summarize the whole concept, guys, technical analysis, it's a science like any science. It's like economics. It is like statistics. It's like mathematics. It's a science, right? And this science started like I believe more than 100 years back, where people in the banking industry, they wanted to draw the data that they receive from the raw prices. So they will receive a price of a gold, a high price, a low price, the open price, the close price, and they started to connect it, all of these prices until they got the shape of the candlesticks. And from here, the science started to accumulate and develop and evolve. Okay? Now, technical analysis mainly, it is about the trends in the market. How can I see the trend in the market? What are the zones that I can expect the price to do some action? But there is a big difference between you are being a good analyst and you are being a good trader. By the way, I can tell you names of a lot of people. They are like super technical analyst, but they do not trade. They cannot trade. He is super in technical analysis, but when it comes to trading, he will blow his account. Okay? So, what's the point? What I'm trying to say? I'm trying to say that technical analysis would support in trading. And if you are an analyst, only an analyst, okay, this does not mean that you are a good trader. But if you are a good trader, it means that you are a good analyst. Okay, I hope you get my point. Why is this? Because in technical analysis, the whole idea or the whole concept of the technical analysis is very simple. I can see the price is moving like this way. Okay, so let's assume this is a chart in front of us and the price is moving like this way. So the analyst, according to the signs, he's saying here, okay, according to the technical analysis, I'll just look at this line chart. I have no data in front of me, but I can notice one thing. I can notice that I can see here a high and I can see here a low, and then I can see here a lower high. I can see here a lower low, and then I can see here a lower high. Okay, and here I can see a lower low, right? So what I'm expecting next, if this pattern if this pattern continues to move in the same direction, I think it is gonna form a lower high, and then it's gonna form a lower low. That's it, right? This is what the analyst is gonna do. So as an analyst, I would say, okay, this is the trend. I have defined the trend. It's a downtrend. We are in a bearish trend. The market is going down. So I'm only looking to sell, right? Because in technical analysis, we say trend is your friend. So we just follow the trends. So I would say I'm just going to wait for the lower high to be formed. And then I will be entering from here. This is the analyst. But when it comes to trading and you have an account with $1,000, and you want to catch this move, okay? And then the market suddenly started to act in reality like this. Let me try to draw how the market might react. So the market, the technical analysis, he's gonna sell, okay? He say the market is gonna go down. Maybe he will enter from here, he will enter from here, I don't know, where is his entry point? But as a trader, I need to get some confirmation because the price might goes like this and do like this, goes like this, and then goes down. If you entered with the technical analyst perspective, the market has gone down. Yes, the market has gone down. Is this guy did something wrong? No, he expected that the market is going to go down and the market actually gone down. But with $1,000, if you entered from here and you waited till here, okay, your account might be blown. if you're not putting your correct stop loss, not position size, if you didn't control yourself because you said the technical analyst said the market is gonna go down. I clicked sell, 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 sell until the market it goes down, but after it blown my account. So trading requires other set of skills other than technical analysis. And to be honest with you guys, nowadays, it is not actually important to be a perfect in technical analysis to be able to be a profitable trader. Okay, and I'll prove it to you. I'll prove this to you right now that technical analysis, it is 10% from your success in trading, not 100%. So remember that the more you learn in trading, the less profit you will make. Okay, you don't need to learn technical analysis. Okay, so this is just a quick introduction about what do we need as a trader. We need to use the best or we need to get from the technical analysis the most that we need to get to make us profitable. Now, the technical analysis actually is based on three assumptions, which is the market discounts everything. So the market tells us everything, what's happening in the market, all the prices that's happening in the market, all the news, it's reflected in the prices. Okay. So every single time the history in the gold, there are some ups and then a crash, ups and then a crash, ups and then a crash. And this is happening on a cycle. So that's a history. And then the price moves in trends. These are the three assumptions of the technical analysis part. Now, as a technical analyst, okay, or when it comes to technical analysis, I can see here there is people would say without the technical analysis, they do not understand what's happening here. There is nothing. If you just go to another normal person, he doesn't know anything about trading, he didn't trade before, he doesn't know anything about technical analysis, and you show him this picture, he would say this is a heart beating or I don't know what is this, right? So the technical analysis, it's just a tool or a way that would help you to visualize the chart so it can make sense. Okay? It can make sense to you by visualizing the charts. How? When we start from here, we can see that, okay, let me just add okay. So I can see that the price, we're making a high, low, high, low, higher high, higher low, and then the price stopped at this point. And then the price came back again to the same zone. Okay? Now, if we are here and I'm looking at the chart, I don't know what's happening here. For me, they said the price couldn't break this zone before. So this for me, it's a support level. Now, the highest point that the price has reached is this point, which is, this is known as what? As a resistant level. From the resistant level, the price also, as you can see, guys, okay, it makes sense for us. So the price moves like this and then dropped. Reach it many times, it couldn't break. The price pushed up, couldn't break, the price goes down. Goes up, and then the price goes down. Now here is some action that might be happening. The price either might go back again to that level, or the price might break. So if the price break, this means what? This means if the price break, will continue to go down until it reached previously tested level. What's the previously tested level? Always look at the left-hand side. So I can see here. Okay, so the price here has reached to this level, has tested this level, and then it come up again. Now the price is reaching historical level. Look at the left-hand side. I can see here some action happened, right? So again, the price respected that zone. It came up again, it respected that zone. It came up again, now it's a decision. The price might come back again here, or the price might continue to push higher. Now, guys, let me ask you a question. If the price is going to push higher from that zone, where is the nearest zone that you need to look at? Let me just remove all of these drawings. Okay. I'll just make it, hello guys, I can hear you. Okay. Let me just remove all of these drawings because it's really simple. This is the market structure. Okay. This is what you need to know. Okay. I'll just make a very crystal clear two lines. Okay. So this is the zone and this is another zone, right? And then what happened to the price? The price breaks. Okay. Now, if the price breaks where the price should stop, I need to see previously tested zone, which is this zone. So the price has respected this zone again, right? Now, the price continued to push high, high, high. Where it will stop? It is stopped here, right? Good. Now, my question is, the price breaks above this zone, right? Where is the point that I can expect some action to happen? First, I will look at the left-hand side. I can see here a high or a zone where the price actually broke the support, right? So this is number one. See, exactly the same point. Exactly the same point. What happened to the price? It goes down. The price goes back again to this level. Either it's gonna break or it's gonna retest. Then the price break above. See, it's not a magic, but that's another zone. This point, it is connected with that point. Then the price retested. It goes up. Where? See, the highest point. What happened? The price come back again. And then the price here, I don't have any data. I cannot see, right? So the price continues to push high, 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 and then it stopped here. It come back to the same level, and then it goes up again, right? I can expect from that level, it will come back, and so on. So you guys, can you see? This is the history, and this is the future. They are all connected together. Can you see it? Did you understand what I want to say? That every single point happened on the market, it will be connected. These are the zones that you need to watch. Okay. Now I have a good question from Marcelo. He's saying, yes, but for how far back in time should we consider? It depends on what you would like to see. Okay. Me, myself, I would like to see just maybe the previous day, maybe the previous 1 hour, maybe the previous 4 hours. I just need to see the zones where I just need to highlight these zones. And I'm based on these zones, I'm going to watch what's going to happen. It is going to break or it's going to drop. That's it. Very simple. Very simple. Now, we have a zone here, right? The price is, not able to break it. So there is a high probability that the price will go to the previous tested zone, which is this one. And from here, I need to see what's the action. Is it going to pull back or it's going to break? If it breaks, then it will definitely stop here. And then if it breaks, it will continue up. If it didn't break, it will come back to that level. That's it. So the market, guys, it is like an apartment. You have the ground floor, first floor, second floor, third floor, fourth floor, fifth floor, and so on. Whenever you reach to a level, okay, you will reach to another floor. Okay, so if you couldn't go up to the next floor, you will go down. If you couldn't go down, you will go up. You have to move between the floors. This is the market. Very simple. Okay. So this is what actually we are trying to understand from the technical analysis. So guys, before the drawing, before I draw all of these lines, it was like a messy chart. right? But once I draw, does this apply on each time frame? Yes, 100%. But once I draw the lines and connect it and to see the zones, right? I could understand, I could expect what's going to happen in the market. So for example, let's go guys to a live market. Let's go to a live market. So I'm not going to show you, um, okay guys, tell me what do you want to see? Gold, silver, oil, crypto, what is it? Gold? Of course, everyone would say gold. I know. Okay, sure. Okay, guys. So I'll come back. I'll just bring daily charts. Yeah, Ramina, it's recorded. Yeah. Okay. So this is the daily chart for what? For the gold. Okay. This is the daily chart for the gold. I'm just going to, you know, walk around here. Now, if we are looking, it's gonna be in the community. Okay. So if you want to bring 4 hours charts to make it more clearer in the structure, we can see. So the market here, in a very simple, it was going up, right? And then the market stopped here. Then the market pulls down to this level, right? So this level, the market is respecting this zone, and the market is respecting what? This zone. The market started to go up. It goes back again to that level. It goes up again, continue consolidate, and then it goes back to that level, right? So this level here, it's a resistance zone. Now, either the market will pull back and come back to here, or it's gonna break. Now the market broke above, and then it come back to the broken level. From that broken level, the market goes up. Now, I'll ask you a question where it should go, where it should reach. It's gonna reach here. So the market goes here, stopped here, started to consolidate, 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 and then it broke above, and then it continued to push higher, right? Now, the market started to push higher, 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 and higher until it reached to this zone, which is the all-time highs. Okay, so this is the all-time highs zone. Okay, now when the market crashed in the gold, where it has stopped, very simple. See, this is the history, right? When the market decided to crash from the all-time high, it has reached the zone where there was an action. It was tested one time, the price pulled back, tested again, broken, and tested again. So this zone, it's an action zone, right? When the market crashed, the market came back exactly to the same zone. So it came back here, right? From that zone, the market continues to go up, continues to go up. It didn't reach again. It has never reached again to what? To the all-time highs. It come back to the same zone here, okay? And then it breaks below it. Now, the question is where it has reached when it breaks, okay? So see, it reached to this level. So why it has reached to this level? Because this level, there was some actions happening here. There was support, retesting, support, resisting, and so on. And then, okay, so for me now, this is the history. Okay, for me now, this is the history. Now, in live market, we are in this zone here, right here. Okay, so guys, live market, we are here, guys. Now, I'll ask you a question, very simple question. If the market, if the market is not able to break above this zone, what's going to happen? It's going to reach to this level. It's going to reach to 3,959. There is a must. If the price failed to break above 4,129, the price is going to stop here. Okay, 3,959. And then what you need to do as a trader is you will highlight this zone for yourself just to watch it. Now, I need to assume that the market is going to break above. Okay, where the market is going to stop. The nearest point where the market will stop, it's here. Okay, so if the market will break above also this zone, where is going to stop? Here. Okay, so these are the zones. Now, whatever the method that you are trying to apply, okay, whatever the method that you are trying to apply, whether you are applying Fibonacci, whether you are applying trend lines, whatever, okay, so from the all-time highs, if you draw a Fibonacci, okay, Fibonacci is telling you, okay, so this is the 14 percentage, this is the 23 percentage. Okay, this is the 38 percentage. Okay, so it's exactly the same zones, guys, that we have applied, right? I know that is sometimes it doesn't happen this way, but this is how its technical analysis work. So you need to know what happened previously, and you need to highlight these zones that has happened previously. And based on these zones, you need to see what is what is my decision? Should I buy or should I sell? So first of all, you need to identify what are the zones that you need to watch. That's the first thing. Okay. Now, even if you go to 15 minutes time frame, very low time frame. Okay. So can you see here in the 15 minutes time frame? See, tack, 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 reach it to this zone, it come back. If it didn't break, it will come back here, come back here, come back here, come back here. That's it. Done. If it breaks, that's easy. It will go here. If it could break, go here, and so on. That's it. Okay. I trade on 15. I just look for wedges, but never look for zones. The zones are very important because without the zones, how can you know as a trader that at this level there is an action gonna happen, either a huge buy or a huge sell. In the zones, there is the actual buyers or sellers. So in the support, the actual buyers. So if the actual buyers defended the support zone, you have to buy. You have to be with them because all of the institutions who are putting billions of dollars, they are buying. So you go with them. On the resistant level, the actual sellers are there. So you need to see there is a fight gonna happen between the bullish and the bearish. The party who is gonna win, you should be with him. Okay? So does that mean we enter in the middle of the bullish and bearish? Of course, no. Of course, no. Of course, no. We don't enter in the middle of the bullish or bearish. I just need to see some confirmation that the price will continue to push higher or some confirmation that the price will continue to push lower. So for example, if I come here to that part, I can see that this is, for me, it's a resistance zone. And I can see that this is support zone. The fight is happening here, guys. Now, the zone that I want to watch, it is this zone and this one. I want to see a candlestick, a bullish candlestick that closes above this zone, okay, here like this, which means that the buyers are the winners. Now, should I enter? Of course, no. When I should enter? When I see that the buyers are very strong and the sellers try to push or to pull them back to go back to the zone of the fight, but they stop them here. And once they stop them here and I see another bullish candle, this is the decision to take a buy. Now, okay, should I take a buy and leave it? What's my target? You should know, you look at the left-hand side. So in the left-hand side, you have a target till this point. Okay? You have a target till this point. So this is the highest high on the left-hand side. This is the price where actual sellers are sitting here, are here. They are waiting for the buyers. Okay? So another fight, it's gonna happen. Either the buyers win or the sellers win. And then you decide. Based on what I should decide? I should decide based on the candlesticks. Okay? So guys, the candlesticks are really important thing that you need to read it. Why? Because first of all, we need to understand what are the components of the candlesticks so we can be able to understand what's happening in the market. But guys, before I jump to the candlesticks topic, did you understand, guys, how you can identify the zones? Thank you so much, Margaret. Margaret, thank you. Did you know how to identify the zones? Okay, so of course, you have zones on the high time frame. Okay, you have this zone on a high time frame. You have this zone on a high time frame. You have this zone as well, and you have this zone as well, and so on. Okay, so you need to identify the zones of the market. Okay, this zone as well, you need to identify because see, this has happened in 2025 October. In June 2026, the price goes down, goes down, goes down, and then it come back exactly to the same place here. Guys, it's not by chance, but definitely it is something planned, right? This zone, it is exactly here where the price goes down. Okay, so time zone for entry exit with high volume. I didn't understand, Mohammed. What do you mean? Time zone for entry exit with high volume? See, your entry should be in the high volume time and your exit as well. Okay, so you enter when the institutions start to trade. What do I mean by this? I mean that you should enter only when the market has a volume. If the market does not have a volume, you are going to lose your money because you need to have a trade where people or the institutions are pushing your trade, okay, to your target. You take your target, you go out of the market. Okay, these times it is the market sessions when the market opens or where the market closes, and when there is a high impact news. I don't recommend to trade high impact news, but of course, I want you to trade when the market opens. I like that question because sometimes that what makes it hit stop loss. Yes, definitely the sessions. You need to trade opening sessions. You need to trade Tokyo opening or London opening or NY opening, right? So these are the sessions that you need to trade. However, you need to understand, guys, that I don't trade anything in any session. If you are a Forex trader, you cannot trade JPP, okay, USD in Tokyo session. You cannot do that. There is no volume in GBP. There is no volume in USD. How can you trade it? Even it's a Tokyo session. How can you trade it? Now, the best time to trade the GBP USD, it's a London session. Okay? If you want to trade gold, gold works on all of the sessions, but with the experience, the biggest moves in gold happened on Wednesday, Thursday, okay, in London and New York, okay, on Monday and Tuesday and Friday in Tokyo, okay. Usually, when I decide to trade gold, I trade gold on Tokyo sessions, okay. Why? It's very respectful. So, for example, I trade on a 5 minutes time frame, okay. This is the Tokyo session. This is the gold in the Tokyo session. Okay. So I can see no manipulation. Exactly. See London, compare London, how it moves today with Tokyo moving sideways for the gold. I don't like to trade gold on London. Manipulate it. Stop hunting. But in Tokyo, that's it. And can you see the opening? Can you see the opening? Can you see the volume? Can you see the big candles moving here? This is gonna make you relieved. Because in 10-20 minutes maximum, you will know that either you are in profit or you are in loss. That's it. What days it's for Tokyo for gold? You can trade Tokyo every day from Monday to Friday. Okay, but I prefer Wednesday, Thursday, shift to London and New York. Tokyo, I only trade gold in Tokyo. I only trade gold in Tokyo session. Only because you can see it's very respectful. Very respectful. See? This is 2 days in a row. You have a clean trend. Okay? Okay, even here, it has started to, I would say, have some aggressive pullbacks. Okay, but can you see the opening right here? The opening right here, it's very, very, very respectful. Okay, so it is actually very clear entry. Okay, see here. Okay, so here sometimes it's not working, but okay, that's fine. Okay, here, very clear trend. So you can see Tokyo is very cool when it comes to trading gold. Okay. All right. So you can trade according to whatever you want, but this is my experience. It is not necessarily that my trading style is gonna suit you guys. I do have a very different way of from you guys. You might be using some different strategy than mine. I don't know, but this is what I see right now. Now, if I want to trade London session, I trade GBP USD. This is how you can understand the behavior of the market. What you meant Asian by Tokyo? Yes. Yeah. So this is the Asian session, Tokyo session. Okay. So if I want to trade London session, I trade GBP USD. See how beautiful this is. Okay, GBP USD. See, okay, very beautiful structure. Okay, see the beauty of GBP USD when it comes to London session. Yeah, see, this is GBP USD. So this is actually my chart where I highlight, I don't know, I think it has been deleted or something. I'll just show it to you. When I trade GBP USD, I think it's been removed. Yeah, I think it's been removed. No worries. Okay, so uh, in London session, it was a beautiful also for the GBP USD. It was really good. Euro USD, I'll tell you why I'm not trading Euro USD in London session because GBP, the sterling pound, is traded by tons of sterling pounds against the dollar compared to the euro. UK is trading a lot of their GBP, a lot of its currency from compared to the Euro USD. Euro USD is somehow sometimes manipulated. Sometimes it's manipulated. Okay, GBP USD it is much more powerful in London session. Okay. All right, guys. Any questions so far at this part? Any question? Okay. So of course, guys, if you want to know what you need to trade, Bitcoin trade it in the New York session. Bitcoin definitely New York session. Definitely. Okay. If I broke the Bitcoin, just see, you will see the massive volume happens in New York session. See, New York session, New York session, New York session. Not here. A lot of see, New York session. All the biggest moves happens in the New York session. Okay. Okay. Now let me guys tell you. Okay. So I have a question. What's the best indicator to the chart? I don't use indicators. Why? Because I can see the candlesticks. And actually, guys, I'll be honest with you. My charts previously was very messy. Two indicators, a lot of drawings, a lot of zones, and so on and so forth. I don't do that. Right now, I don't do that. I'm very, having this is my chart. This is my real chart that I do the analysis. This is an indicator known as session viewer by Mike Wish. Okay, you can get it. So this is the sessions. I just need to see the opening of the session. Okay, and then I trade based on that. What about Fibonacci levels? Okay, so for the guys, just to make sure everything is on the direction. So why I don't prefer to use indicators? Because all of the indicators are lagging. All of the indicators are lagging, right? This is number one. Number two, when you open Trading View for the first time, the first thing that you see, it is the candlesticks. You don't see RSI, you don't see moving averages, you don't see Fibonacci, you don't see anything of these things, right? You just you see candlesticks, right? So the best thing that you need to learn the candlesticks, what are the zones? You need to understand the support and resistance, and you need to understand the candlesticks. And that's it. Done. You don't need anything else. Why? Because if I come here on, for example, let's say 15 minutes time frame, right? Now the I can see here, I have a support level, and I can see a resistance level. So there is a fight here, right? Now, what I want to see, a candlestick, okay, a bearish candlestick, as you can see here, it might happen right now. If this candlesticks, the bearish one, closed below the support level, okay, and closed below, and then retested, and then retested back to that level, okay, and it is not able to come back to that zone, that's a confirmation for me to take a sell. But where should I exit? What if it doesn't retest? Don't enter. Because if it didn't retest, okay, this means that you might enter here, okay, and then the price come back to that level, and then it will stop. Why it will stop to this level? Because I can see here some sort of another and resistance. So there is an action gonna happen here at that level, as you can see, right? It will come back here, and then the price will flip, 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 and then it what? It takes you out, it stop you out. You know that this might be the retest. One candlestick flip back, stop you out of the trade, and then the price push down again. It might be a retest. You don't know. So don't go directly when the price breaks, you go. No, no, don't do that. You should be patient. You should see what's the next candle after the breakout it is going to do. Wait until it closes and then take a decision because it will give you a better entry. It will give you a better confirmation. All right, guys. Thank you so much, guys. Thank you. So, do you stay on what 1 TF? One time frame? Yeah, so my strategy that I'm using, it is based on session timings. Session timings. I just trade the openings of best time frame H4. There is no best time. There is no best time, guys, for the higher time frame or lower time frame. It depends on what is your rules. Okay, there is nothing called I have the best strategy that makes me 50% per month. There is nothing called the daily bias is the best thing. There is nothing called the 1 hour chart is the best. There is nothing called the 5 minutes time frame is the best. Nothing is this. The best thing is what you can do. The best thing is what you can do. What do I mean by what you can do? What actually suits you. Okay, so I tried a lot of strategies, price action, trend lines, indicators, everything that comes to your mind. Okay, nothing of them work with me. Why? You know why? Because my personality is that I'm not a patient guy. I am not a patient guy, right? So what I want to see, for example, when it comes to, let's say, I'm gonna trade gold, okay? So I'll just go to Tokyo session. Now you tell me, okay, why you don't trade New York? Because I have been watching the market and I back tested 1 year back and I found that Tokyo session win rate for me, according to my rules, it's the best thing. So you need to do some effort and figure out what suits you. Trading, it is about a pattern that is happening every single day. 90% it might happen, 10% it might not happen. If it didn't happen, your stop loss will be triggered. If it happened, your take profit is gonna be triggered, right? So according to this pattern, there should be some rules, some crystal clear rules. So for example, because you guys you are very interactive and I really like the session with you, I'll tell you what is my very simple rule strategy. And you guys are not gonna believe it, but after all of this trials and errors in trading, I didn't find anything work to remove my emotions and being not patient in trading. Okay. I just need a very, I would say, silly strategy. Okay. What I do, I wait for Tokyo Open. For example, I highlighted this candle, the 5 minutes candle for the Tokyo Open, this candle, right? Okay. So this is the 4 a.m. Dubai time candle. 4 a.m. Dubai time candle. Okay. I need to see a candle breaks above this range. I highlight the high of the candle that breaks. If there is another candle, bullish candle, breaks and close above the high, which is this zone, okay, I enter a buy. So I'll buy from here. I'll put my stop loss below the previous candle. I target 1 to 2. My target is achieved. That's it. Done. I'm done for the day. Okay? That's my rule. Can you see? I taught you my strategy in just 5 minutes. I figured out a pattern. This is the opening candle. No, I don't teach outside of P prime. So I need a candle to break by the body above this. Okay? And then I need another candle. I don't consider anything. I don't consider the market structure. I don't consider anything. Okay? Because guys, believe me, I don't believe in any of these things. Right? I need a candle to close above this one, which is this candle. This candle has closed above the previous high, right? So what I will do, I'm just gonna buy. I put my stop loss below the candle. I target 1 to 2. Done. That's it. That's my strategy. Can you see? It's a pattern that's happening every single day. See? Easy. But you would tell me, I'll just apply this strategy right now and I'll make a lot of money. And every day I'll make 1 to 2. You know what? What's the problem? You will never make money unless you control yourself. You have to lose. The market will give you some losses in sequence, losses, 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 and the strategy actually works. This is the strategy. Just 1 to 2, very simple, very crystal clear rules. Nothing, okay? Below the previous candle of the entry. Okay, so I have entered from that candle, right? I put the stop loss below this candle, right? Targeting 1 to 2. Okay. Now, the same, you know what, guys? The same strategy I am doing on the GBP USD. Okay. But my stop loss, it is in the different position. You would tell me, okay, you are changing the rules according to the asset class. Yes. How did I figure this out? Because of the experience. Experience. That's it. Right? So this is the opening of the um, this is the opening of London. This candle breaks above, right? Once this candle breaks above, the other candle breaks above and closed, I'll buy. I put my stop loss in the middle of the range. Okay. Now this one, okay, it hit my stop loss. That's fine. I tried again. Okay. So this candle breaks, this candle closed below. I'll enter a sell short position from here. I'll put my stop loss on the middle of the zone. I'll target 1 to 2. Okay, I got it. My stop loss is not hit. Here, my stop loss is hit. Here, my stop loss is not hit. Okay, I'm done for the day. That's it. So there is a lot of details about it. It seems like a simple strategy, but the application or the execution, it is, you need to set and test it multiple times. Okay, guys? So the last thing, just to confirm, we spoke a lot about the strategies, but we didn't explain the candlesticks. Just a quick thing. My pleasure, guys. I'm so happy that you liked the session. Uh, and one of the things that I like when it comes to understanding the candlesticks. So this is the candlesticks. Okay. The most important thing that you need to understand is the wick. This one. This is the wick. Okay. So what's the wick? The wick in the bullish candle, it's the highest price that the buyers could reach to it. So the buyers started to push higher, higher. They reach it to that level, let's say $100, but they couldn't maintain that level. This is the reason why in my strategy, in my rules, what I have done, I do highlight the high, as you can see, of this candle. So if this high has been broken and there is a body of a bullish candle closed above it, this gives me an indication that the buyers are so powerful. So I enter. This is my confirmation, right? So you need to understand that whenever the candlestick looks like this, let's say it's a bullish candle and the candlesticks looks like this, okay? This gives you an indication that buyers are exhausted. Buyers are exhausted because the sellers, do you see? This was actually a candle. This was actually a candle, but they ate all of the volume. Who ate it? The sellers. So if I want to enter the market, I cannot buy. I just need to see a confirmation. What the confirmation that I want to see? I want to see a bearish candle with a great body like this. This is give me a confirmation that buyers have been kicked out of the market. Now you can go with them. Okay, definitely this is a price action. The problem with the price action that it has a lot of guessing. There is no clear rules. You have to wait. And as a personality of myself, I don't like to wait. I don't like to guess. You know what I do? I'll just open my MT5. Okay, here is the trade that I took. Okay, I made the profit today, $178, two losses and four profits. That's it. I don't watch it because I know it's either gonna hit the stop loss or it's either gonna hit the take profit, and that's it. Done for the day. Price action with candlestick is based on which time frame? Again, price action. If you are gonna deal with a price action, you cannot go for the 5 minutes time frame. The things that you need to check is 50, 30 minute, 1 hour time frame, or 4 hours, longer time frame, because in the longer time frame,